Thesis on DJT? I don't know if I have much of a thesis, given at the end of the day, like, there is no fundamentals to the company. So the thesis is mostly that the election's over, Trump won, the enthusiasm around politics will diminish, Truth Social's fundamentals won't be any better. This is more of a psychological game than obviously a value investment. You know, this is all about investors capitulating, getting tired of a stock. And typically that happens fairly quickly. You know, people, if they don't see their stock moving up, they'll sort of sell it and move on. And then the suckers will hold on, obviously, but they don't really count that much. So the second derivative here is obviously negative. People are realizing that, you know, DJT is not going to be their salvation. Yeah, Nvidia's green, Tesla's recovering a small amount. Let's see. Let's look at the Chegg model. Maybe do a forecast or something. Oh, Samson said couple of million you would buy Chegg. Well, last quarter they made 14 million. So you would buy, and the quarter before that they made 53 million. So you're telling me you would buy this company for a few million? Does that make sense? They've been profitable 6 out of the last 7 quarters. On average, they make 30 million a quarter. You sure? Sure you only pay a couple million for that? You got anything you want to sell me for that? That kind of price? Why don't you sell me something for that kind of price? Chegg's worth something. Just trying to understand the thought process. You didn't think about how much money the company makes before you thought about what the company was worth? I'm going to sell you my bank account. Well, I don't like you, so the bank account's probably not worth anything. Okay, just making sure here. I want to sell you my $100 million bank account for $1 million. You don't want it. Nah. I'm not saying there's no risk to Chegg. There is risk, but you gotta use your brain a little bit. I like how everybody knows about Chegg because they've been a customer. Turns out there's a little bit more to it. Another guy, why bullish? The AI is gonna hurt them. Yes, yes. But this isn't, we're not doing a beauty contest. We're making investments. This is a little bit different from a beauty contest. Well, they have a lot of shares outstanding on Euronext, but it trades in the US too. If there's just a beauty contest, Chegg would be a loser. But the stock market isn't a beauty contest. It's a bargain hunting contest. Beauty contest, what's the prettiest company? Well, Nvidia's the prettiest company, but it doesn't mean it's the best stock. I mean, they just the revenue next quarter, you could theoretically make all your money back. They still almost have $1 billion in revenue. They have a big language business. You guys just never learned how to think about stocks, period. They're gonna make 20 million this quarter. 2-0. ChatGPT is great. Chegg does more than just that, though. The question is the stock a buy? That's really it. Whether you like the product or not, it's irrelevant. You're never going to see me wearing Lululemon yoga pants, but it's still a good buy. You guys are just think about stocks. A lot of you, not everybody, obviously. A bunch of you guys think about stocks the wrong way. It doesn't need to turn around. Another obvious mental handicap. Why does revenue need to go up for a stock to be along? I'll give you a simple example. If a company has 50 million, then 40, then 30, then 20, then 10, then 0, okay, this is cash flow. The net present value of this cash flow is 120 million. I would buy that for 1 million. That's called a bargain. Even though the revenue is down, it's never going to turn around. I know for sure it's going 50 to 0. That doesn't bother me because I know I'm paying a discount for what it's worth. I could buy $100 for $1, I'm going to do it. Now, it may not be the way you like to invest, which is fine, but it doesn't mean it's wrong. Value investing is not for everybody. No, Will, that's not true. Because look, Chegg is still dangerous. It's not like this is a no-brainer. It's just a level 1 way of thinking about it. You got to get to a level 5 way of thinking about it. There's nothing to do with price equals low, then buy. I mean, if the price is very low, I'm guaranteed to get my cash out. I'm relative to what I'm paying. I'm very happy. Of course, I'm trying to buy things for a discount to their value. It's very, very simple. It's called value investing. Buffett, Graham, Dodd, Value Act, Loeb, even Greenlight. It's not that hard. No, they have debt too, Blob, so it's not a cash versus market cap thing. Listen, you guys want higher conviction. It seems to be telling me that maybe you don't have enough capital or you want one big bet. Just split the bets. Make as many bets as you can. You want as many good bets as you can get. Of course, Jeff, there's no guaranteed money in the world. If this stock is pumping, I must be blind because the stock's been down from 10 billion market cap to 200 million. So where's the pump part? You just don't know what you're talking about, man. It's okay. So don't try to come to my channel and sound smart. There's actually a lot of engagement. Interesting. All right, so their guidance is 135, 133 to 135. No, challenging businesses who are very challenged can sometimes be great longs. They're sometimes not great longs. Businesses that are soaring in growth are sometimes great longs. Businesses that are soaring in growth are sometimes not great longs. There's no pattern that works. The stock market's very, very tricky. Certainly, if you're long a company's stock, you want their earnings to be better than expected. But what does expected mean? It can mean a lot of things. Expectations could be very low. Yeah, I mean, no matter what happens to Chegg, I mean, whether they find a way to come back, stabilize, and grow, or they go to zero, you know, when you look at a company, you're trying to figure out how much earnings can I get out of this thing before now and eternity. In pharma, we have generics. So what applies to Chegg applies to generics. For every drug, for every single drug, it will go generic and revenue will go to zero, inevitably. And usually it's within 5 or 10 years. So with that logic, you never buy a drug stock. Of course, Ozempic's going generic very soon. It's a major question for... No, Mike, you're missing the whole point. It's 20 years. It's 17 from issuance or 20 from expiry. And usually you're spending a bunch of those years developing the drug. Anyway, the point is, if all drug revenue is going to go to zero eventually, does that mean that all drugs are worth nothing? Of course not. So the theory is preposterous on its face. On its face! We're not here to make fun of anybody, but I just get annoyed when there's sort of like a clear misunderstanding about what investing is all about. So I don't know what Chegg's numbers are going to be. In fact, there's a way to tell using blinded credit card numbers. All right, so where will they guide to, and what will they say? I really don't know. I really don't know what trade to do. It depends on you, your risk profile, all kinds of things. Imagine CAVA halted after hours, 2 hours from now. You're gonna see me. Woo! Woo! Yeah! Woo! You are the father. What? Yeah. Let's go. Yeah, of course I think Abbvie is oversold. It's a great relative long, but again, when the market goes down like today, it's hard for it to go up. Even AstraZeneca's just briefly went up, came back down a bit. I think it'll resume the uptrend though, so I'm buying back a lot of the stuff I sold much higher. This is called trading, I believe. Some people call it that. I don't think there will 100% be a press release tonight. I think that the point is there's... All right, let me break this down for you since there's some confusion. This is a calendar of 2024. There are approximately 20 days, trading days left, okay, in December. I'm going to exclude the 31st or 25th, but add the 30th and the 31st. So let's call that 21 days, okay? How many trading days do we have left here? Well, there's 10. So how much did we say? 21? And 10 is 31. Subtract Thanksgiving, that makes it 30. 34 days. So there's a 3% chance it's tonight. It could occur anywhere in that distribution. 11 to 15 puts probably will go to zero, but let's say if today this position hit for me, I got 34,000 short to 26, goes to 2. It's 816K here. We got the 7.5s. We got the 10s, the 5s, the 15s, 12.5s, and 17.5s. Let's do the amounts. large amounts till it's hard to count. We get 41, we get 30, 41, 37, 38 here, 138 here, 150 here, 372 here. Yeah, I'm assuming the stock goes to 2. The value of these puts is as follows. Cost for these puts was, I don't know, let's see. What did I pay for these bad boys? Well, we could also look at the current price. 17 cents. 38 is 44 cents. A half are 27. And these are 63. So this times 100 times this was my cost. Okay, the current value would then be this times 100 times this. So yeah, that would be the P&L. So grand total, if it comes out tonight, fails, goes to 2. We are at 1.3 M, but we may gas that up further. How much do you guys want to make? 2, 3, 5, 10? Who wants to make 10? 3% chance tonight and tomorrow and the day after. It's only Tuesday. I might just put a little more gas on this like this. Chegg's earnings party or it's a Chegg's earnings disaster in one way or another. What is this? 𝗕𝗢𝗘𝗢𝗑, right? Is that what the name of this company was? 𝗕𝗢𝗘𝗢𝗑. And it was, then we did the other one. It was QTTB. We did, so it's 4290. And then we did 𝗪𝗏𝗏, right? I think that's what it was called. 𝗓𝗏𝗏. 𝗓𝗏𝗏𝗘𝗏. Close enough. I don't really believe in chart patterns in the first place, so. All right, so we added 2 more models to our database here. We've updated AstraZeneca. Looks like we have to update Merck and also Sanofi and Pfizer. Stefan wants me to look at a company called 𝗖𝗓𝗓. Remember Monopar? Remember that short? He did great. When it comes to Shkreli and biotech, man, if I'm shorting some, you should be shorting some. That's it. That's it. That's the only rule to the game, man. Anything else, but don't come at me with anything about my short record. Yeah, I'm not that great on the long side. Fine. I don't need to be. Yeah, I can't really trade anything other than biotech. So what? Well, VKTX pumping on this Amgen news, I think. If Amgen's drug doesn't look good, VKTX will be the only one left. I looked at CAVA before, but I can look at it again. It looked like a super growth company that was doing fine, but in a tough industry. Yeah, no, I can refresh it. I always like to refresh these because I learn more usually the second time I look at something. But let me do 𝗖𝗓𝗓 real quick first. Yeah, HUMA I think is a 0. Yeah, I don't really love this 𝗖𝗓𝗓 at first blush. I don't keep looking. Oh, Rumble. Slow market cap. They have any revenue? Just short the right wing. Yeah, they have real revenue. How? Are you sure about that? Last quarter was 22.5. Oh, revenue's down. Where's last year? That's not good. 2.7. A little bit rich. Yeah, 𝗏𝗏's good. I like 𝗏𝗏. I don't know if Oxinto. I thought everyone gave up on oxyntomodulin. All right, CAVA Group. What's the stock price now? It's up a little. So to go to their website, I could just do CWP. That's pretty quick. Okay, and eventually I want to get that to the investor relations site. So it just goes straight to the IR. But for now, it just takes it to their website. I'm gonna read the corporate news. I guess their report today. Yeah, most people think it's a short, but they're obviously growing very, very rapidly, which it's hard to short any stock if their revenue is growing very, very rapidly. It's just kind of sort of difficult. Did they mess around with their calendar year? Or am I just seeing things? I think I'm seeing things. So CAVA reports tonight. Chegg reports tonight. Half the S&P reports tonight. Oh, so they report these like weird 12-week quarters. This is bizarre. Okay, so let's see what CAVA reports tonight. Or CAVA. Yeah, because CAVA is very expensive. All these CAVA type stocks, very, very expensive. Very hard to not see this eventually get paid on a short, but you know, it's not easy. Short and growth stocks. Yeah, I looked at Carvana. I didn't think it was the big short that everyone thinks it is. You know I love shorting. Options aren't easy. That's the first thing. So you want to, your first time, you don't want to do too much. Do as little as you can. That's my advice. And for options, what I would do is I'd pick a stock you're already comfortable with. Let's say it's Microsoft. You know Microsoft really well. And instead of buying the Microsoft stock, try to buy some Microsoft in the money call options. And it'll cost you less money and you'll get more volatility out of it. Now that's also a blessing and a curse. You can easily lose your whole account with stock options, or you can make a lot. Most people lose their whole account. So you gotta be very, very careful. What else can I tell you about options? Notice how if it's Kathy, she's a Godel subscriber, she's a woman's name, I'm gonna explain options like it's to a 5-year-old. I don't care what. If it's anybody else asking, I'm like, man, you gotta learn options yourself. Why should I help you? I'm gonna sit with my hands and knees, like, I'll explain everything to you, baby. I got you. So, you know, if the Microsoft, an option is the right to buy or right to sell. That's right, Alexa. So an option is a right to buy or a right to sell. You are purchasing, it's almost as if you're purchasing a little piece of paper that's a contract from whoever the seller is. It's usually, you just say it's the market, from Mr. Market to you. And it's almost more fun to trade these pieces of paper than the actual stock. Let's pretend this is 100 shares. So like a bill of Microsoft, and there's Bill Gates' face in the middle. You could trade this. What's Microsoft's stock price right now? For 424. Or you could trade these pieces of paper. And on Godel, you do OMON. That's also the Bloomberg symbol. So you learn both systems. And you do Microsoft OMON, and you have all the options. There's two kinds of options: call or a put. I had to teach this to a friend of mine who's now a top hedge fund manager. This was 20 years ago. Call up and you put down. So when I call you up, I might put you down. So that's how you know. The call is the right to buy, which, you know, is kind of go up. And the put is the right to sell, which is kind of go down. So in this piece of paper, this options contract, you got to specify the type, put or call. You can even just do P or C, right? So let's do call. And the other big thing is the strike. You can pick any strike you want, but we're going to do something called in the money. So the money, the price of Microsoft is 420. So this is the chart of Microsoft, let's say. This is 420. So in the money for a call is something below 420. So at $300, you're deep in the money. At 400, you're still in the money. At say 419, some people call it, say, at the money, in the money. And then at 440 or more, probably call that out of the money. Okay, great. So the strike we're going to pick for this is 400. So we're in the money calls. Now, what is the right to buy a stock at 400 worth if that stock is trading at 424? Well, obviously, it's worth at least $24.05. So instead of trading this for 424, you can just trade this for $24. And that's a pretty wild thing. You know, it's a really different thing. Now there's a lot of issues here. One, this contract's worth more than 2405. Why? Because you could theoretically buy this contract, short the stock, and you'd have a free put. So we'll go into that some other time. But if Microsoft went to 500 and you own this call option would be worth $100 because you have the right to buy it at 400. And the right to buy something at 400 is worth $100. And you could sell this to anybody. They'd immediately use it, cash in their chip, and say, I made $100. So if you sold this for 99.5, somebody would snap it up and say, I'll make free 50 cents. But if you had the stock, you would only go from 424 to 500, which is a good gain. It's about a 20% gain. If you bought the stock, that's plus 20%. But if you bought the option, it's plus 300%. So you can see how options kind of magnify your gains and loss. Now what happens if Microsoft went to 300? Well, you'd still own the stock. And even though it went from 424 to 300, you're down 33%, but you're not out of the game. With options, you got a bunch of issues. These options expire, so you have an expiry. Let's say the expiry is next week or tomorrow. You know, the longer you have for expiry, the more your option's going to be trading for, the more it's worth. But if this went to 300, the right to buy a stock at 400, if it's trading at 300, is worthless. You just toilet paper. You just throw it away because you could just buy the stock in the stock market for 300. Why do you need a right to buy it at 400? So with the options, you lose 100%. You lose every cent. So that's basically how options work. There's a lot more to learn, but that's a basic kind of level 1, if you will, of buying options. When you combine them with trading stock, whether you're long or short, you can have a lot of complex strategies and payoffs. But at the end of the day, the only question you really always have to ask yourself is, what is my payoff chart? So the payoff chart is a really simple idea. There's some chart that exists that explains your payout. That payout is basically, this is $0, right? This is break even. And here's the stock price. And let's say it's 0%. And here's negative 5%, negative 10, etc. And of course, here's plus 5%, plus 10%. No matter how complicated your option strategy is, right? No matter how complicated, you're going to have some payout chart. Now this is, this is what a call option sort of looks like, something like that. And there's lots of ways to manipulate this. They're usually going to be at right angles, but you could have an options chart that looks like this, where this is buying vol. You can have an options chart that looks like this. This is selling vol. You could have all types of ways to explain options, your payout. But no matter what your complicated payout is, something crazy like this I did once, you know, and you're basically trying to replicate, okay, I think this is what's going to happen in real life. So my option strategy pays me a ton if it goes down 5%, pays me a ton if it goes up more than 10%, but I lose if it's up a little bit, and I lose if it's down a lot of it. So you put on a complex trade like this, you know, at the end of the day, no matter what, how many instruments it takes to do this with common stock, calls, puts, selling and buying, you're still, at the end of the day, you can explain it all in a payout chart. So that's my brief tutorial on options. Like I said, I wouldn't do that for anyone, but if you're a Godel subscriber, I work for you, technically.